Snipers, you have to see what's happening in the cryptocurrency market this Sunday as futures markets have opened and Bitcoin is slowly grinding its way back above 34,000 US dollars, but we've yet to come test 34,788, and this would be the first time that we have confluence at this level with the 50-day moving average along with the weekly, monthly, and previous weekly open. And so this is a extremely early confirmation now that we can get if we're going to start seeing upside for Bitcoin, and this is a type of confirmation that we didn't have in the past, because you can see here in early June, the 50-day moving average was at $44,000. So now that the 50-day moving average is all the way down to 34,788 US dollars, this changes the approach with the price action at 35,000. It is actually now more significant than it's ever been throughout this whole consolidation because the 50-day moving average is here. So I want to talk about why that is a good thing for Bitcoin if we want to assume upside. And then we'll look at what's happening to traditional markets, of course, the effects of that. And then the Ethereum to Bitcoin chart is showing weakness right now. You can see several days of red candles below 65,000 Satoshis. I want to talk about how that's going to affect other altcoins because the fear and greed index is quite high right now. And that's typically going to indicate that capital will flow into Bitcoin, as fear in the market typically moves money into safer assets. It's just like traditional markets where institutions will hedge into gold. Same concept here for cryptocurrencies. Are we going to see Bitcoin dominance see some strength here coming into this week? That's actually on the table, because you can see here we have this resistance that are sort of, getting tested right now. And with the Bitcoin price at 35,000, we break above this 50-day moving average. Once again, this is a different playbook now that we're so close to this 50-day moving average. That gives us a straight shot to 40,000. So I want to talk about what I'm expecting as we open this brand new week, and we're going to start to see how traditional markets are going to unfold. And that's certainly going to affect the cryptocurrency market because we kind of just stalled out below 35,000 throughout this weekend. And that's not surprising, being the fact that we're at such an important level. You guys are watching the Snipers channel. My name is Naeem Al-Abeidi. Remember to smash the like button for the YouTube algorithm. So we'll start with the weekly chart because the weekly candle is resetting here in 14 minutes. And so this week we did not get a test of the 50-week moving average. And at this point, Bitcoin, if we were to make the assumption that we breached this 20-week moving average to come down to test the 50-week moving average and then continue further up, that's actually a valid storyline because we've only tested the 50-day or the 50-week moving average one time. And when you reach a destination and you immediately turn back around, that's typically the final destination. And so the fact of the matter is we haven't had a cup of coffee at this 50-week moving average. It's only been tested once, and that's clear with today's weekly candle here closing in 13 minutes that we're not going to get another test of that 50-week moving average, which right now it's sitting at that $31,500 level. That to me is a very positive sign coming into this new weekly candle. So we have sort of this bullish tail. I don't want to really call it too bullish because the body of the candle wasn't even able to surpass the previous week's body. But we're going to watch this weekly candle as it resets. But so far, the 50-week moving average has theoretically held as a support, right? So we look at the daily time frame. We have a low. We have this lower low, this higher low, and we've only seen continuation since then. And now that we're flirting with 35,000, the 50-day moving average is sitting here for us. We get above this 50-day moving average at 35,800. That's a very huge change in direction and bias because now Bitcoin has rescued the 50-day moving average, and the next target would be the channel resistance to test 40,000, and now we're coming close to the 200-day moving average, which is now at 45,000. So the cool thing about time is it buys you opportunities, and because Bitcoin has stayed at this level below 44,000 for several weeks now, maybe 2 months at this point, the 50-day moving average has been able to work its way down to 35,000. So it's easier for the bulls now to rescue Bitcoin. So I just want you guys to realize why things are kind of shifting into this week, because this is the first week that we're so close to that 50-day moving average now that it's at 35,000. So we get above 35,800. Now we're back above the monthly open. That's going to assume that we could start seeing the early signs of a extremely successful rescue operation where the trend may actually be in a reversal. So that's what I'm watching right now with the daily chart. We go into the 4-hour chart. We could try to look at what's happening, but we've yet to test 34,788. So I'm not too worried about the micro time frames right now. We just know that that's the important level. Now, with the downside scenario, it's always going to be on the table. If we're below 35,000 at any point in time, the range that we're playing in right now is all the way to 26,000 if we're below 35,000. So always remember that. If we're below 35,000, the range we're in brings us all the way down to 26,000. So that's always going to be on the table. But if we're not going to see sell pressure, then the path of least resistance is sideways to a little bit higher, not lower. So that's why we're coming back up, grinding our way into Monday. Hopefully by the start of this week, we can get above the weekly monthly open at 35,300. That's going to change the whole storyline here for Bitcoin. Now we look at altcoins, Ethereum, a couple days of downside here. And this is not a surprise. I told you guys, if Ethereum does come down below 65,000 Satoshis, that's probably because there's still a lot more fear in the market. If this comes down in the short to medium term, it looks like it wants to come test this 100-day moving average at 60,000 Satoshis. Let's see if that holds. If it doesn't, we might even come further down towards this 53,000 Satoshi level. But I think most of this will be based on what happens to Bitcoin. Regardless, I think that in the macro, we're going to be seeing this trend up. And I say that with Ethereum 2.0 launching, of course, being the basis of DeFi, with the Ethereum US dollar price, if we stay above 1980, then we're still on our way to 3,000 because we're also in this higher range. It's kind of cool how Bitcoin has itself in this range where there's a lot of downside, but Ethereum is in a range where there's a lot of upside. So you can see it's holding itself above 1980. That's confluence with the 200-day moving average. As long as we stay above that, Ethereum's bullish. We get below that, then now we have an opportunity to get entries below 1760 towards the previous all-time high at 1440. So you guys know that. Total cryptocurrency market cap chart, not much changing here. Others dominance still showing strength, which is amazing because the Bitcoin dominance chart is also starting to come up. Doesn't mean others dominance has to come down. You can see they're both up today, but as long as we're above 12% dominance, others dominance factors, all of the altcoins, including Ethereum, those are going to be strong assets. So we're not seeing too much of an imbalance right now where Ethereum might be doing really bad while Bitcoin is doing good, or some altcoins are doing really good while Bitcoin is doing bad. Really, it's just mimicking Bitcoin right now, and that's typically what happens when there's not much volume in the market, right? Now, traditional markets, we're seeing futures open up. We're not getting too many hints, not surprised, of course, but right now we're going to want to monitor this DXY. If this DXY starts to push down, that's going to be a positive thing for every market. So 91.92 is the key level to watch here. For the upside, we don't want to get above 92.62. We want to stay in between this range so that we can have a calm week and allow the markets to do their thing without the DXY affecting them. And S&P 500, formed new all-time highs last week. We want to monitor this. Is it going to see continuation of upside? I think it's going to be more interesting to watch U.S. oil. As I mentioned yesterday, you can see it already leaped above the previous candle. Is this going to really see some more strength to the upside? That could confirm that commodities are doing well. That's a leading indicator. Traditional markets will do well, and then Bitcoin can follow, right? So I'm going to be monitoring this as we come into this week. And I hope you guys enjoyed today's analysis. I appreciate each and every one of you snipers tuned in to our channel. If you want to win one of my favorite books on value investing principles by Ray Dalio, comment below, share this video, and you'll have a chance to win. I'm going to pick a winner from our video yesterday. Jameson Alexander says DXY eventually headed to 84. That would be very interesting for the cryptocurrency market and traditional assets. That would assume a lot of further price discovery and upside. So I appreciate each and every one of you. Once again, thank you for tuning into the Snipers channel on a Sunday. Have a great Sunday, and I'll see you guys next time. Snipers